Hey guys, is everyone able to hear me? Yeah. Hey Ran, hey Yamilu, hey Lusayo, Jake, Techno Tom, right? Thanks for tuning in, right? I, s- I can have this, I can have this setup, prepared, like 12 hours before, 1 hour before, 5 minutes before, and it always happens that the moment I start streaming, then they say, are you really the streamer? And they ask me to relog in, right? And I need to go through the whole authentication process again. But anyway, I'm here, guys, right? And thanks for tuning in to today's session, right? The first of our December pre market live analysis. I think we're going to be doing another 2 or 3 of this before we take a 1 or 2 week break for the Christmas period. Okay, I can already see a question come in on Techno Tom asking for a volatility indicator. 13 week to calculate the average daily volatility because 13 weeks is 1 quarter. I'm a swing trader. All right, Techno Tom, I'll talk about that in today's session later. Okay, Fabio, nice to see you. Philip, nice to see you. Moss, nice to see you. Good afternoon, good evening, good morning, wherever you guys. All right, Ren, yes, I will take a look at pound dollar. I'll take a look at pound dollar later today too. Okay, just let me ensure that all the charts, everything is working fine. Everyone can hear me well. There should be no problems with the audio or the video. So let me know if you guys have any encounter any issues. All right. Just checking the charts. They're all fine. Okay, let's begin today's session. All right. So guys, welcome back to another pre-market analysis brought to you by IC Markets. All right. So this is where we look at the markets right before they open. Kind of look at what we are expecting for the week ahead. So Technotom, right? Good question that you have, right? Because the views that we have, right? The views that we have is usually for the week, right? So if you're a swing trader, naturally you're looking to hold positions longer than a day, ideally about a week, right? Anything that holds more than a couple of weeks is more towards you could argue it's a little bit of a swing trader, long-term trader, or even those who hold it for a longer period of time. Those are position traders and maybe even investors. Okay, all right. So yeah, our views for the pre-market analysis at least is just what's going to happen for the week. Okay, all right. And later today, in about 13 and a half hours time, right, Emily, right, my new analyst, will be doing a webinar, and she will be focusing on the smaller time frames, the 4 hours and maybe even the 1 hour time frames. Okay, but for today, I set the what we can expect for the week ahead, right? Many of the key views to look at, and so for those of you guys who are wondering, sorry, I'm using a Mac, so it's a little bit different. It's zoom in and zoom out, right? Hey Jake, nice to see you. Right, right. So all right, so let's begin. All right, remember everything in this webinar is educational in nature. Nothing should be construed as investment or trading advice. So please do your own due diligence before you guys trade. All right. Now, Michael, right? Hey, Desmond, right? Hey, Michael, right? So, thanks for tuning in. Right. Let me know where you guys are tuning in from. Right. Well, I believe most of you guys are tuning in from Europe. Right. Most of you guys should be tuning in from Europe. All right. Unless you're in Singapore, where it is 4 a.m. now, right? So kind of early over here, or you could argue kind of late, right? But yeah, it's 4 a.m. here. Oh yeah, Switzerland, good stuff. Yeah, and for those of you guys who are in Australia, I'll be swinging by, right, Adelaide, um, in the last week of December, right? Actually, Christmas, right? 25th on Christmas Day, all the way to 31st, right? So for those of you guys who are in Australia, right, I'll be swinging by Adelaide for the end of the year, right? I just hope that there's something to do over there. Okay. Yeah, I love you guys from UK and South Africa. Good stuff, man. Good stuff. I was just in UK in September, right? And it was during the supposed heat wave, right? I found it really, really nice because Singapore is really, really hot, right? So I kind of welcome the heat wave there, right? Um, just let me refresh my live stream, ensure everything's working fine. Okay, it works fine. All right. Okay, good stuff. Nice to see you from Uzbekistan, Iskandar. All right. And anyway, for those of you guys who are wondering what we're going to focus on today, right? Key news events, analysis of majors and custom requests, right? These days, after your feedback, right, I focus more on the analysis on the majors, right? Along with the custom requests that you guys have. So if there's any instrument you want me to take a look at, let me know. I'll do my best to get to them. All right. I can see Jake asking, where are you from, Desmond, right? From Singapore, right? So, not sure if many of you guys know where Singapore is, right? Only in the last couple of years, I guess, or maybe last like 5 years, 10 years, when we started to host the F1, the Formula One, then people be like, oh, so this is Singapore, right? Yeah, and we recently overtook New York and I think it's Zurich, right, to be the most expensive country to live in the world, right? And as a gauge, right, of the cost, right, in Singapore, to own something like a Toyota Camry, right, something like a Toyota Camry, right, it costs in USD equivalent about 200,000 USD to own a Toyota Camry, right, in Singapore. So it's crazy, right? I don't wish that upon anyone. I don't wish that upon my worst enemies, right? And you only get to own it for 10 years, right? So after 10 years, you need to pay for it again, right? So that's why it is the most expensive country to stay in now. Right, Sophie, yeah. Oh, nice, another one from UK. Good stuff, man. Um, all right, hey, yeah, nice to see you tuning again. Yeah, but it's terrible. All right, terribly expensive place to live in right now. All right, but anyway, all right, continuing on today's session. All right, continuing on today's session, introducing your host. For those of you guys who are wondering, who is this guy, right? Desmond Leong. Right. Yes, my name is Desmond Leong. So I run the award-winning research firm, Everest Fortune Group, also the Forex Army. Recently, we are rebranding as the Rocket. Right. More on that in a bit. We are finalists of 2019, 2020, and 2021 for best FX equity and FX and equity research. Recently passed a couple of these prop firm tests. Right. It's quite popular among retail traders. So it took me and my team took a couple of it. Right. Among us, I think we passed it. I think Peggy passed it over 11 times, right? So she's addicted to those tests, right? I don't have as much time, right? So I recently passed one. And we regularly work with major financial institutions to actually help them forecast where the markets are heading, right? So we have a special partnership with IC Markets where we bring you guys the good stuff, the juicy stuff, the stuff that take your trading to the next level, right? This is just the certificate, right? Took a 100K challenge. I have to redact, of course, the names because we're not endorsing any of these prop firm tests, right? But yeah, I took one recently, a 100K test, passed it. And what I can share with you guys is that you don't need to spend 10 years in Wall Street. You don't need to spend 10 years. What's the word for it? Having a CFA, CMT, Chartered Market Technician, CFTE, Masters in Financial Engineering. You don't need any of that to be a good trader, right? All you need to really do is to learn the right things and apply them the right way. That sounds easy to do, but it's not, because in the world of trading, just is very different from the world of academia. Like I always share with you guys, right? In the world of academia, the harder you study, the better you do. Right, the harder you study, the better you do, right? The more you read a book, naturally, the more knowledge you get, the more correct knowledge you get. But in the world of trading, it's very different. You can spend all the time reading all the books, all the forums, right? And you end up realizing that some of them are teaching you nonsense, right? Some people don't know what they're teaching. Some people in the forums just talk a lot, but they don't trade a lot, right? So you might end up learning the wrong things or learning the right things and applying them wrongly, right? So it ends up putting you in a situation where you lose money, right? Even though you got more knowledge. But the danger of that is that with the more knowledge, you think that you have more confidence, right? So there's a danger, especially when it comes to trading, right? Is that naturally, it's not like there's a definitive handbook out there that tells you that, definitely a definitive handbook out there that says that this is the correct way to trade. If you read this, you pass it, congratulations, right? You'll be a good trader. There's no way to do that. But of course, with IC markets, we have a whole list of playlist of educational strategies that we teach. And of course, for myself, I do share with you guys my approach to trading. So what I focus on in today's session in my life analysis is that I don't just show you the analysis, but I show you the thought process that goes behind, right? The how I arrive at analysis, and I think that is very important, right? So take the time to really understand the thought process, because that will help you become a better trader. I'm teaching you the thought process from a 1 week perspective, right? You can easily be used for the lower time frames, the 4 hour time frames, the 1 hour time frames, but just take note that if you apply on the smaller time frames, right, there'll be more volatility there because there's news, right? And when there is news, there's no amount of I guess the word is a preparation, right? You can have the best technical setup, but if you trade right before non-farm payroll, for example, right, and the market goes crazy, right, it doesn't matter if you're the best setup in the world, you get wicked out, right? So just take note that when you're trading on small time frames, there are a lot more of these known unknown events. It's coming, but you don't know the outcome. Like, the non-farm payroll is coming on the first Friday of the month, but you do not know the outcome, right? A lot more of these will happen, so you need to be a lot more careful. Okay. Can you guys no, you can't join Everest, but I think my team Rocket, right, will be we're actually looking for good analysts over time to always join us. So if you can follow my teachings well, follow my way of presenting well, right? We're always and you want to start a career in just practicing and honing a good analysis skills, right? Maybe down the line, right? But we don't do any teaching, right? At this point we don't do any teaching. It's all free for you guys, so don't ever think that you need to pay for anything out there, for any of these like $10,000 Instagram trader courses, right? When you have it all here at IC Markets. Okay, now no, you can't buy in. Right? All right, so anyway, let's begin today's session. All right, I'm gonna take out my handy dandy trading view, right, and put it over here. Let me know if you guys should be able to see it easily, right? Okay, here we go. Let us start with dollar index. Okay, let us start with dollar index because that helps us establish what we are expecting for the week. Okay, let us establish what we're expecting for the week. Okay, so dollar index, I'm on a 1 day time frame. I will go to 1 week time frame and see, am I missing anything? All right, so look at the 1 week time frame. I can confidently say, not really. Not missing much. All right, then we go down to the 1 day time frame. I will say that I was expecting a bounce last week. It has since broken this level. Okay, this little bit of a pullback level over here, which happens to coincide, right? Which happens to coincide. I usually use the Fibonacci to fine tune it. Sorry, just let me nudge myself a little bit to the left. Yeah, there we go. All right, so the 50% Fibonacci retracement, I was hoping for it to hold, right? It did not hold. Okay, and this very strong overlap kind of support. A lot more Fibonacci, if I'm not wrong, kind of lines up at this level over here. If you look at it closely, Yep, we had the 78.6% too. What I like to do from a presentation perspective, if you notice that, just to let you guys know, if my starting point of the Fibonacci is here and my ending point, and my ending point is all the way up to here, okay? All the way up to here. As price goes down and it breaks the 23%, it breaks the 38%, as you can see. As it goes down, it breaks all these levels and they become irrelevant, okay? That means they are taken out of the equation. So what I like to do to keep my charts neat is I will come here and I will filter for the 50% and the 61.8%, right? So it just leaves me with the two most relevant forecasts, okay? The two nearest levels, and these two too. All right, so it broke the 78% and it's bouncing off the 100%. All right, so nice bit of levels here. And what can we expect, right? What can we forecast for today, right? For this week, given that these levels have been broken, all right? Let me just see. A little bit tricky. This is definitely a little bit of an intermediate support level now, which we use as the first support, right? What it's experiencing right now, right? This would be the it bounced off quite nicely from the 61%. No, sorry, this is the 100% is a little bit lower. 100% Fibonacci projection is slightly lower down here, but price did bounce off the 61.8% right on the dot. Okay, as you can see over here. Not too confident that it's going to drop all the way to 78.6%, but I do think, right, 61.8% remains a key level to be broken, right? This little level it is testing would be our little bit of a first resistance. Okay, so if it breaks this nice little 61.8, the next key level I'll be looking for it to come down to is a little bit of this overlap over here. A little bit hard to see, but this could be a very nice second support, right? Yes, I have the same thoughts for DXY, right? It is good to help us establish the direction of the markets on what we are expecting for dollar strength, because if we get the direction of DXY correct, right? If we get the direction of DXY correct, we naturally get the direction of euro dollar, dollar franc correct, sometimes dollar yen and pound dollar, because they are all correlated positively and negatively, right? So it's important to get one correct because it affects the views on so many other instruments. Okay, but we will keep this view first that we might be seeing a little bit of what's the word for it? A little bit of bearishness on DXY. I'm not too big a fan of it actually. Yeah, it's hard for me to call any other level, right? It's really difficult for me to call any other level. This should be too far away for a second resistance. Okay, now let me look at euro dollar first. All right, yes, last week we forecasted euro dollar to reverse. It did actually reverse from our first resistance. It spiked up a little bit higher than expected, reversed down to our intermediate support, right, and bounced back up. So what can we expect this time? Okay, I will clear the charts. All right, I'll clear the charts and see what we can expect this time. Okay, so I will have to tell you that there are many times where the charts were a lot cleaner, right? The charts now are just terrible, right? There's hardly any easy levels to play from. Hardly any easy levels to play from. Yeah, it's a little bit hard now. Key level over here, right, could form something like a little bit of a double top pattern if this level is broken, right? Price is right at this level, but I'm looking at this level and it looks a little bit like a topish pattern over here. So we need to keep a close eye on it, right? If it breaks, it will trigger the move down. Okay, how that lines up with DXY? DXY is this little bit of bearishness, right? So if it breaks, it should go up. Same thing for euro dollar. If it breaks, it should ideally go down. But what we're thinking is that probably not. It probably can have just enough to support this bounce, right? I think it is right on the 23% too. Yep, the 23% retracement. So in Elliott wave theory, for those of you guys who are big fans of Elliott wave theory, okay. So my cat has just jumped here again. This guys want to see. This is the original indicator, right? Yeah. Oh, sorry, Leah. Yeah, sorry. Yeah, I fed you already. This is what happens at 4 a.m. every morning. Actually, yeah. Okay. Yeah, so for those of you guys who are big fans of Elliott wave strategy, right, and Fibonacci theory, is that 23.6% is usually the first key Fibonacci retracement level that needs to be broken to trigger a bigger move down, right? So very, very important level, right? In this case, I think that if it breaks, it could even go all the way down to the 50% retracement, over here, right, to the 50% retracement, just about over here. So I'll be establishing this as my second support and establishing this as my first support, right? But I have a little bit more of a bias that price might actually make a bounce up, right? Might actually make a bounce up to test this resistance again for this week, right? Slightly more of a bullish bias over here. Okay. Second spot, you can actually put it over here too, right? If you don't want it to be too far away, it is probably going to be the 38%, about there, slightly lower. Yeah, over here. All right, to see a little bit of a bounce. Yeah, but if it breaks the 23%, ideally you come down here again. Breaks this, it comes down to here. Right, 23% is the key Fibonacci retracement level. Very tricky. If I were trading like DXY euro dollar, I probably would stay away from them. Very hard to call any of these moves. It's not clear, right? It's not clear at all. Okay, I see I request Aussie Cat. I'll take a look at it. Right. Jake has a question. Recession in the US hits with a dollar index, right? Rise more or fall, right? Usually the dollar index would fall, right? Because you think about it, right? The last, I wouldn't say recession, yeah, but anytime there's a recession, what happens is that there's less spending, less demand for the dollar, right? So it's just very basic supply and demand, right? If there's less demand for the dollar, right, naturally the dollar will weaken. Okay. We look at dollar franc, which is the last of the triple combination of DXY, pound dollar, and euro dollar. All right, we look at this. Right, dollar franc is just on a freaking free fall. Okay. I can't even find the support level on this anymore. Like if we look at a chart like this, I would say stay away from it, right? I would say stay away from it. There's hardly anything to trade. It's probably broken all its Fibonacci levels, right? The 78.6 might be the last one that is end over here, right? The 78.6 Fibonacci retracement is the last one with a little bit of overlap support over here. If it breaks this level, right, I'll put a downside confirmation here. If it breaks this level, what we could be expecting is our price to come all the way down to here, the first support. This is kinda in line with our view on DXY, because DXY is bearish. If it drops, that means dollar franc would also drop, right? And breaking this overlap support over here and breaking this 78.6% retracement would trigger the move down. Okay, but where else can I find the next resistance level? Hard to find any, right? We got a little bit of overlap level here, which I'm just going to put as the first resistance. Notice when I draw the overlap how it cuts, right? You might think that I'm just picking a random level for this, but I'm not, right? Look at how nicely it cuts all the candles without cutting the bodies, right? Maybe cutting one body is fine, but you want to try to train your eyes to find places where it cuts the wicks instead of the body. Okay, US 30 got it. Okay, this would probably might be a view on dollar franc, is that if it closes below this downside confirmation, it could trigger a further move down. Okay, pound dollar, which was one of our requests earlier today, right? Let's see what we can expect on pound dollar. Am I missing any key levels? This could be a support level. Coin cuts the levels quite well, right? And maybe over here. Okay, let me go into the 1 day time frame now. All right, so yeah, this could form the second support level, although it's a little bit far away. Okay, what I'm looking for is the first support level, which is going to be over here. Okay, why I pick this level, is because you can see a nice little reaction from here, a nice little bounce from there, nice bounces, and nice bounces. I don't really like this bounce over here, but it's still at least it saw a little bit of a bounce, right? So this is why I'm picking this level, right? And you can see price bouncing quite nicely from here. So we play from one support to one resistance to one support, right? The next resistance I can find is over here, right? But wait, first let me fine tune it with a little bit of Fibonacci. It could be slightly above the 61, I think. Yeah, it's slightly above the 61.8. Man, look at that. The price just reacted perfectly off the 61.8 retracement, right? So it needs to break this little bit of an intermediate resistance, right? Break this little bit of an intermediate resistance for it to, kind of, I'll look to kind of buy on this support to play the move up to the first resistance over here. Okay, all right, yeah, that would probably be my key view. But the next key resistance is probably over here, right? You could play up to this level as the key resistance, right? Nice reactions of this level too. Okay, so yeah, this would probably be my view for pound dollar, right? Similar to euro dollar, similar to DXY. DXY has weakness, which is supporting our view on pound dollar, because with DXY weakness, then we can expect pound dollar to rise a bit, right? Little bit of correlation euro dollar in that if euro dollar is really going to see that bounce, right, it will help that pound dollar is also bouncing up, right? So this would be the view that we're looking at. Okay, I just want to take a quick look at euro pound and what happened. Oh man, we have caught the move. Yeah, so euro pound, we caught the move amazingly last week, right? So if you got in on the trade, congratulations, you made a hell of money, right? Oh man, such a nice move. Okay, anyway, without digressing too much, we now look at dollar yen, right? Dollar yen, right? Reverse off our key resistance level over here, right? And price is a little bit far away from it now. Now that it looks like it is breaking an overlap, what happens, right, is that we should expect it, right? That should be our downside confirmation to trigger the move down to here. Right, so this is now the downside confirmation. If it closed strongly below this level, we could see prices come down to here. Now our resistance does not need to be that far anymore. Now that price is so far away from it, I'm just going to remove it, right? What is more relevant is the resistance levels, right? So in terms of the resistance levels, maybe over here, if price really breaks this level, right? So very nice little bit of overlap, right? If price really closes below, this downside confirmation, right, we could see a very nice drop in terms of price for it to come all the way down to here. Okay, but it requires a downside confirmation first, right? So if price breaks the downside confirmation, pretty nice drop down to first support. Okay, and you could technically put the first resistance as your stop loss, right? Not a trade recommendation, but yeah, this was how we'll consider it, right? It looks like it's closing below it, so we could play the move down for dollar yen, right? Okay, I take a look at franc yen in a bit, right? Anyway, to look at Aussie CAD, it's nice for us to look at dollar CAD and Aussie dollar, right? Aussie dollar did not work nicely last week. I think I was expecting it to drop. It did not drop, right? And it's painful for me, right? It was very painful. What we can expect this week, right? I mean, we win some, we lose some, right, guys? What we can expect this week for Aussie dollar. Looking at overlap over here, I would probably look to buy on weakness, right? I'll look to buy on weakness to trigger the move up, right? How high can it go? How high can it go? Not that keen of price coming all the way up to here, right? I don't think there's a clear level for it to go to. Right? If I could, I probably would not trade Aussie dollar, right? If I could, I probably would not trade Aussie dollar. Hard for me to establish any key levels, right? I mean, I do have a support. I do have a pretty nice second support over here, but it's hard for me to call a trade for it. Yeah, hard for me to call a trade on Aussie dollar, at all. Yeah, it's a bit hard. Okay, I'll take a look at gold in a bit, right? Yeah, 0.67. It's hard for me to call a move anywhere on Aussie dollar. Let's take a quick look at dollar CAD. Right, dollar CAD has broken our support nicely as forecasted, so I think there might be a trade for dollar CAD. Okay, it's starting to break out of this little bit of ascending support, triggering a bearish move. Okay, this little bit of support level which has been broken will now serve as the resistance. So if you can, right, sell on strength to play the move down to this first support. This is one of the clearer ones that I think would be a good opportunity, but you need to wait to sell on strength. You can't sell now, it's too expensive, right? You need to wait for price to reverse a bit, touch this level to play the move down, right? But yeah, it's a little bit tough to trade FX markets now, right? This would be the pullback that I'm looking at. No, this would be the second resistance in case you were considering a stop loss, right? So yeah, I would wait for price to minimally kind of make a pullback first. You can't get in right away. Make a pullback to play the move down. Okay, pretty decent move on dollar CAD we could consider. Taking a quick look at Kiwi dollar, yep, I expected this to drop last week, it didn't drop. I think last week is probably the only week that out of this entire year that my hit rate wasn't more than like 70%. Very frustrating. Very frustrating, right? Markets are crazy in December, right? I always say that the markets tend to behave differently on Fridays and in December, because in December, what happens is that those people who are unprofitable for the year, right, they start trying to chase their goals, right? So maybe it makes the market move a little bit crazier, and those people who have been profitable for the year, right, they have a little bit to play around with, right? So they also start trading with a more carefree attitude, right? So it ends up being, all right, ends up causing the markets to trade more emotionally and more. There's so much more volatility in the markets. Sometimes the technicals are not lending itself to the same kind of confidence levels that we're used to. Okay, all right, but it's the same thing as Fridays, right? Fridays, the markets always behave the craziest on Fridays, because people who have lost money for the week, they're trying to turn a corner, they start playing it crazy, and the same people who have made money, they start playing it crazy too. Okay, this would be our support level, and just take a look at the support level for Kiwi dollar. Price is so far away from it. I wouldn't say buy now. At the same time, when you look at price, you can't say sell, because look at this, there is no resistance level here at all, right? So you can't exactly say sell, you can't exactly say buy. So what can you do? Right? You can't do much. You can't do much, right? at most maybe 78.6% Fibonacci retracement up there. But no, you honestly can't do much with a chart like this. Okay, between first resistance and first support, right, and a bigger second resistance up here, right, there is really no I wouldn't be confident to play any move on Kiwi dollar. Okay, we go on to gold. Gold worked out quite nicely. We are waiting for this upside confirmation, right? Price break the upside confirmation to trigger the move up to this level. It has reached that level. So if you took this trade last week, congratulations, you're back quite a bit of pips, good money. Okay, all right. But what can we expect this week? Now, price is once again, a lot of you guys, if you're looking at the 1 day time frame or 4 hour time frame, right? If you're looking at the 1 day time frame, or the 4 hour time frame, you would think that price is going up further, right? But the danger, and that's the importance of looking at the weekly time, at one time frame higher, right? So it allows you to see what are the key levels. In this case, big resistance over here. No matter how I look at it, right? There's a nice big amount of resistance over here. It would be crazy, right? It would be crazy to suggest that price would break up beyond there, right? Just let me take a quick look in terms of Elliott wave theory. Yeah, it's right at the 61.8 projection too. So yeah, you could see price spike up a little bit higher, but I would think that, you know, we could what would likely happen is for there to be a reversal, right? For there to be a reversal. Okay, I don't have enough confidence, right, to call a move, to call a bullish move, right? So I would think that, you know, ideally you should be looking for a reversal down to here, and if it breaks that level, you know, even potentially further down to here, right? You'll be a bit crazy to call the move all the way up, right? But this is a key resistance level. It's a key Fibonacci projection level already, and it is likely going to be another key Fibonacci projection level here. Yep, about 78.6. So we could be seeing a fair bit of resistance around here. All right, I'll go call it as a bearish area. All right, so it could yeah, we could very well see a nice reversal for price. What might happen is that price might spike up to this level, take out all the wicks, all the people who are short, take out all the wicks, and then reverse, right? So if you were to look for a second resistance, you know, you ideally kind of put it slightly above here, right, as a second resistance, just to be a little bit safe, right? And put it slightly above the second resistance, right, if you want to play safe. You know, it's so tricky. Second resistance is too close. Yeah, put it above this resistance area. Okay, right. A lot of people would likely get caught out on this trade. Okay, so be careful. Be careful when you're shorting over here. Price is likely to spike up, take out all the short orders, right, and then maybe go down. Okay. Okay. So back to Techno's question, right? Discuss volatility calculator, average daily volatility. Okay, I mean, there is a calculate average there because studying which is 1 quarter is important for me because I need pairs that move at least 90. So you're looking for pairs that move at least 90 pips a day, right? So I think naturally, if you're looking for pairs that move 90 pips a day, and you wanted to use the what we call the average true range, right? So the indicator that you should be using. Okay, let's go with something like euro dollar. Okay, yeah, something like euro dollar. What you want to use is the ATR, average true range. Okay, so it tells you the average range of the indicator, of the trading instrument. Okay, I'm going to remove stochastic for now. Okay, ATR. Okay, so if you're looking for something that moves 70 pips a day, right? In this case, right? 70 pips is 0.771 0.0070, right? Because 1 pip is 0.0001, right? So you're ideally looking for something just like maybe minimally, what is it, 70 pips? Do you say 70 pips? 90 pips a day. So you're looking for something like 90 pips a day, right? Which is around this level. Okay, 90 pips a day, right? If you're looking for 90 pips a day, what you should be looking at is you're looking at the 1 day time frame, not the 1 week time frame. Okay, the 1 week time frame, if you use ATR, it tells you what you can expect price to move for the week, right? What you should be using the ATR for is on the 1 day time frame. Okay, because that tells you what you can expect for the day, right? Notice something like euro dollar naturally falls below 90 pips a day, right? Most of the time it fluctuates around 70 pips a day. Okay, what about pound dollar? Okay, pound dollar, maybe, yeah, there you go. We're just going to take a expanded look on here, right? Pound dollar, could it meet your criteria of about 90 pips a day? Yeah, it could meet your criteria of 90 pips a day because it seems to fluctuate around that level, at least for since May. Even since May last year, it's been moving at 200 pips, 100 pips, right? So 90 pips a day, no problem, right? ATR indicator, right? A smoothing of 14 days, 2 weeks, no, 3 weeks actually, right? It should be enough. If you want it a little bit more smooth, you put it over a 30-day period. Okay, this is 2 weeks, right? Or maybe more than 2 weeks, right? Depending on how it's calculated, because on the weekends the markets are closed, right? So if you want, you could put it as 21 days, right? Give you a month, right? On a month-to-month basis, pound dollar always delivers with a volatility of more than 90 days. So a simple can you use these levels to enter short? Nope, you cannot use these levels to enter short after retests, right? ATR is just the average true range, right? It's the average range that the markets might fluctuate on a day-to-day. Historically, it has fluctuated minimally 90 pips, but it is not a trading signal, right? It is not a trading signal at all. It is a good idea to maybe know the amount of buffer you want to use for your stop loss, right? But you don't use it as a trading signal. Okay, do not use ATR. Personally, for me, I wouldn't use ATR as a trading signal, right? What's much more important in trading is the support and resistance levels, the momentum, right? The oscillator, the divergence, is something overbought or oversold, right? Maybe Fibonacci, retracements, extensions, right? Wave theory, correlation, all those are more important than, hey, the markets, fluctuated 90 pips today. It tends to fluctuate. It has a range of 90 pips over the past few months, right? Hence, I'm going to take a trade. No, that should not be your way to trade. Okay, that should be the furthest thing away from your approach to trade. Okay, there's so many other things that you can use to trade, and ATR is more used as a volatility guide, meaning that if you had a strategy, right? If you had a strategy, which tells you that, all right, the markets tend to fluctuate this much, 90 pips, put your stop loss at 1.5 times ATR, meaning that you need to give your trade a little bit more breathing space for your stop loss, right? Maybe to give it a breathing space, you put it at like 1.5, 1.2 times ATR, right? So that is the only thing, right? You don't exactly use it as a trading strategy. Okay, anyway, back to my my topics, right? The markets, WTI fluctuating between support levels, reverse off the resistance, bounce on support very nicely. We're going to keep this view. Nothing much is going to change on this. Okay, all right. Maybe only like a nice little trend line here. A nice little trend line is approached. So what is going to happen is that going to be squeezed over here towards the end of the year, and maybe even have a bit of a rocket move, if it breaks a key level. If it breaks the support, right, definitely, right, look for it to drop to the second support, right? It needs to break this first support, a very nice level, and the next very, very easy support for it to come down to is here at the second support. We had a request, right, for US 30. Did I have a request? Yep, I have a request for US 30 earlier, which is the Dow Jones, right? Crazy move on Dow Jones. Price shooting up. You could say it's a range trade for WTI, but at the same time, right, it has been ranging a bit. So I'm always a little bit suspicious when the markets have been ranging a little. It just suggests that price might break in another direction. Okay, so big levels on Dow Jones US 30, right, is the big resistance level up here. Right, this catches most of the levels, right? So this would be the big resistance level. So I established this first on the weekly time frame. Notice I'm not on the daily time frame. I'm on the weekly time frame, and I come and establish these levels first, right? Once I establish this level, then I look at this. Okay, you know, we could have a support level over here, and the support level could even go as far back as this level over here, right, as like this support level. Once I establish my big levels, then I go into my daily time frame, right? Then I say, okay, you know, it could be here, but that is a little bit far back. You know, I could look at the first level here. So I wouldn't be so ambitious to play a crazy move all the way up, knowing that I have a fair bit of resistance up here, right? I have a nice bit of resistance up here. So even though I'm bullish now, right, I wouldn't be bullish. I don't have that much more space to be bullish. I don't mind, right, if price drops, you know, I don't mind playing a move up to here again, right, even potentially a move up to here as the second resistance, right? But I wouldn't be too ambitious, right? So I wouldn't be too ambitious. I will wait for price to kind of drop a bit, right? Or maybe at this level, you know, you could play the reversal from here, right? I wouldn't be too surprised if price is there, right? I will look for the first reversal down and play the bounce up, okay? Yeah, at the first resistance, right? If it comes up to here, you know, it probably could be a good resistance, and let's see if it touches our magical 127 level. If it does, I'm all in on the trade. Well, there it is, right? 127, my Nike tick. You guys know how much I love it, right? It comes all the way up to here. I'll wait for price to come up to here and to short it for it to come down. Very nice setup. All right, very nice 1 to 7% Fibonacci extension setup, along with a pretty decent resistance level that comes up there. Okay, all right. So definitely going to look to short this at the 127 area around here. Okay. Just touching on a couple of other stuff, right? We got the DAX. DAX has been breaking out quite nicely. Let's see if there's any other key levels that are close to it. Nope, this major resistance is the only level left. Right, this major resistance here is the only level left, right? So if you're expecting weakness across indices, right, this could very well be the weakness that we're looking for, right, for price to make a short-term reversal, right, back down, right? I really don't see prices going that much further, right? So nice little bit of resistance. I would look to sell on resistance to play the move down, but hard for me to establish any other levels above this first resistance without using Fibonacci projections, right? Yep, I would maybe the only Fibonacci projection could be from here up to here and use the 61.8, which seems pretty far away too. Oh yeah, it's too far, way too far. There is hard for me to call a move. Let me just see if I'm missing anything. Nope. Hard for me to call a move. You could call a move from here. Man, yeah, even then, right? Probably look at the 100% projection. Yeah, if I would have to move, right, this movement from here to here, same movement as the movement from here to here, right? So you could argue that if it really does want to break out, if it does want to go a little bit higher, right, the other level where it can go up possibly to the first is the second resistance up here. All right, one swing plus one fit retracement plus win. Yes, yeah, that is enough for me, right? That is enough for me, right? So this is my view on Dow Jones and S&P 500. Oh man, look at all this, man. They're all rising to all-time high levels, right? It's It's crazy. Everyone thinks that, you know, interest rate, I mean, like the hikes are ending, so there's so much bullishness, right, on the equity markets. But I'm a little bit worried, right? It's a little bit worrying for me. It should be fearful when everyone is bullish, and be bullish when everyone is fearful, right? So nice bit of first resistance here. If I have to pick another resistance, is up here, right? So hard to call a move, right? Hard to call a move, man. But this was like a 1 A, B, 1 2 3 4 5, so we could be 61.8 could be much higher actually. Yeah, 61.8 might be much higher. Nah, no levels here. Yeah, this is a 61.8 projection right about here. I suspect that the indices, when they open, markets might have a smaller reaction to push prices down, right? That is my suspicion, right, on what's likely to happen on the for indices, right? Nice little bit of reaction to push prices down before potentially going up further. Okay, all right, but yeah, nice projection there. Okay, I think that covers most of our instruments, right? Yeah, most of the levels that we're looking at. Ethereum, right? Finally breaking out of a key resistance level, right? Finally breaking out this very nice key resistance level, which will now form the support level, because you should be looking for prices to rise quite nicely to the first resistance over here, right? Ethereum make a nice little bounce up to here. Okay, that would be the view, and we need to tighten our support level, right? If we were to tighten it, maybe up to here, right? Or if you want, you could put it over here. Hard to say, right? Markets are a little bit tricky for crypto, right? But minimally, right, we should be able to see prices. If it holds above this support, right, it should rise up to the first resistance. Okay, nice bit of a little bit of a breakout over here for Ethereum, right? NDX, no, I don't really look at NDX. Is that the Kiwi index? Is that the Kiwi index that you're referring to, right? Nice bit of support over here, right? Prices finally broke it, right? So we should be able to see prices rise up, right, to the level. Nasdaq, okay, yeah, Nasdaq we can take a look at. I thought you meant like a Kiwi index or something. Like what is NDX? This level is broken. Yeah, you could potentially see a pretty big move up to 61.8 retracement, which is about there, right? So a bit hard to call for Bitcoin, a little bit easier to call for Ethereum, right? Last one maybe the Nasdaq, which is US 100. All right, so Nasdaq, we are right on a key resistance level over here. Price is testing it. You could argue that it could be breaking out already. You could argue that it's right at the level. Let me see the higher time frame. You know what, on a higher time frame level, I would argue that it has broken out, right? And you should look for the bigger move up to maybe over here, right? So Nasdaq is the one that probably disagrees a bit with the rest of the markets. But if I was trading Nasdaq, I would look to buy on weakness. So still for it to fall a bit like the rest of the instruments, right? Still for it to fall a bit, right? But for it to fall a bit before rising, right? Buying on weakness to trigger the move up to first resistance up here, right? So this would be the same view on Nasdaq, right? Same thing, weakness first before bullishness on Nasdaq. Okay, now that's it for me, guys. Thank you for staying with me throughout today's session. If you found it useful, please smash that thumbs up button, right? It really helps the YouTube algorithm be able to find our videos better, right? YouTube loves it, right? And anyway, right, I look forward to seeing you in about 12 and a half hours, right, by our session by Emily, right, who will be taking us through the live markets analysis. Okay, stay safe, and perhaps next week in the once again the pre-market analysis. Okay, thank you, Philip. Right, thank you, Jack. Right, thank you, Sophie. It's wonderful having you. Thank you, Yamilu. Right, stay safe, trade safe, guys, wherever you guys are. Right, don't give away all your yearly gains in the last month of the year. Okay, peace out, guys. Peace out. Take care. Bye bye.